Hey Siri, what does goodwill mean?
Goodwill means friendly, helpful, or cooperative feelings or attitude.
Okay, goodwill in accounting does not mean what Siri just said goodwill means. Now, that's a good definition of goodwill. I think if you look up goodwill in the dictionary, that's what you get. Sort of friendly, good feelings towards each other. That's goodwill. And so when I bring it up in accounting class, a lot of people bring in that previous definition into their explanation of goodwill or into their understanding of goodwill. And what I want to say at the start of this video is just get rid of that. The term goodwill in accounting isn't about good vibes towards our fellow man or whatever goodwill might mean to you. It's I know in the US it's a retail store where you can buy used clothing and things like that. Dismiss those definitions of goodwill. In this video, we're going to learn about the accounting definition of goodwill. And goodwill only happens in accounting when a business is sold to another business. That is what creates goodwill. One business purchasing another business. So I'll give you an example from my life, and then maybe an example from the stock market if you want to look it up. So the best way to explain goodwill is just to give an example, and here's a pretty straightforward one. When I was growing up, my dad ran a small consulting company. And his job was whenever a union would go on strike and there'd be an argument between unions and management, my dad would often be a mediator, sort of trying to negotiate on one side or the other, or just trying to be the person in the middle trying to get a deal. So he was a person that helped to get union contracts signed. And that's how he spent his career. And when he was ready to retire, he thought he'd sell his business. Now, I went to my dad's office fairly often, and as a professional accountant, as a CPA, I went to lots of offices, law offices, other businesses, just because you visit offices when you're an accountant, you're doing audits and things like that, you see how offices work. So if you go to a law firm, for example, generally when you sit in the lobby of a law firm, most of them are trying to impress you. They smell good, a lot of them have fancy books on the bookshelf, expensive furniture. The one I remember had like a fountain in the foyer or whatever you want to call it. They're nice places. My dad's office was not like this. It was as unimpressive as they come. You'd walk in the door, there was no receptionist. It was this dank, dark hallway in the basement of a building. Cheap desk, cheap furniture, everything was kind of crummy in my dad's office. So when he sold his business, and I'm going to make up numbers here, but I don't think I'm, ridiculously out of the ballpark. He probably sold the business for about $100,000. And when the guy bought the business, you need to think, okay, what's the purchaser buying? And of course, the person got my dad's desks, his filing cabinets. My dad didn't have computers or any computer systems. There's no employees there to be, transferred to this new business. There was nothing else, just, a desk. He didn't even get the office. It was not like my dad owned the office building. It was just a rental, and this guy was in a different city. So he was just, put it in the back of a U-Haul truck and hauled it off one day. I'm going to be generous, and I'm going to say at most, the fair value of my dad's assets was about $1,000. Now, the guy bought the business, the purchase price, and again, we're just using nice round numbers here. I'm not privy to any of this, but let's just say he bought the business for $100,000. Now, you might rightly be saying, well, he bought a desk, a couple of filing cabinets for $100,000 when he could have gone to IKEA and bought them for $1,000. That doesn't make sense. But of course, you know as well as I do, when he bought my dad's business, he wasn't buying the filing cabinets. He wasn't buying the furniture. What he was buying was things like the brand name. My dad's company had a name, and it was a fairly famous company in that limited area. he was also buying, and this was probably the main thing he was buying the client list. And so what he bought was, for the last year or two of my dad's career before he retired, my dad took him around to all of his clients and said, hey, this is the new guy. And as they, negotiated new contracts, my dad worked with him for a couple of years to kind of, pass along the client to this new purchaser. And so that's what the guy was buying, but that stuff wasn't on my dad's balance sheet anywhere. That stuff was nowhere to be found on a set of financial statements. In fact, you couldn't list that on a set of financial statements because it's very difficult to value. You can't reliably put a value on it. So when my dad sold the company, though, that created goodwill, not for my dad. That created goodwill on the purchasers' accounting records. So here's the gist of how this transaction would look. The guy would go, okay, I bought a new company. Congratulations. I got some new assets. Debit those assets. I got a filing cabinet, a crummy desk, whatever else, $1,000. All right. Credit cash, $100,000. Well, this transaction then created $99,000 of goodwill. He paid $99,000 above the fair value of those assets. And why did he do that? Because of all those intangibles. And goodwill is considered to be an intangible asset. So when he purchased the business, he would go debit assets, debit goodwill, and credit cash. Now, each year, as time goes by, this guy or his accountant would have to look at the goodwill and say, hey, is this client list still valuable to you? Does this name brand still have value? When you bought it, you paid a premium of $99,000 for it. Is it still worth $99,000, this name brand, this client list? And maybe it holds its value. So we don't amortize goodwill like we do other assets. We don't say, oh, it's useful for 10 years. What we do is, every year, we look at and reevaluate the goodwill. Has it gone down in value? We don't write up goodwill in value. It's very possible that you make an acquisition and the name brand gets more and more valuable over time, but we do write down goodwill in value. So a couple real examples involving goodwill. When Facebook purchased Instagram for, I believe it was $1 billion, they certainly didn't get $1 billion worth of stuff. But what they got was the Instagram brand name and the clients, the members of Instagram. So that would have been a very large goodwill transaction on Instagram's books. Another one that didn't go very well, I think that was considered a very successful purchase. It was a good buy for Facebook. A less successful one was Microsoft's acquisition of Nokia, the phone company. And in recent years, they had to write down billions of dollars of goodwill because they paid way above the fair value of the assets to get the brand and the market and access to various, handset manufacturing and other things that Nokia did. And they paid a premium for it. Well, it turns out as time has gone on, that premium was less and less value, and the accountants have said, no, it's not worth the extra money we paid for it over time. Now, this guy who bought my dad's business, this is 10, 15 years ago, probably that goodwill is mostly gone by now, right? Like the fact that he got transferred a client list and a brand name, much of that will have gone by now. And so he'll have to evaluate every year and estimate what the value of that goodwill is. So I hope this video has been useful to you in better understanding the concept of goodwill. It's the amount you pay to purchase a business above the fair value of the assets. So again, if you pay $100,000 to buy $1,000 of assets plus brand name and all that, those intangibles, you've got $99,000 of goodwill. Hope this video has been helpful to you. I'll talk to you soon.